You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to The Money Hour with your host and mortgage expert, Tina Mitchell, right here at 1150 AM KKNW, the Saturday, October 22nd show. I'm committed to providing you knowledge needed to be successful in every area regarding your finances. Knowledge is power, and that's what you'll receive by listening to the show today and every week. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but you can always call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to ask any questions that I have guests in studio today. And right now, I have Tony Sablan with New York Life, and we're going to be having a conversation today about long-term care. Tony, thanks for coming back in studio.
Hi, Tina. Thanks for having me back, and it's good to be back. So today I'll be sharing some thoughts on long-term care insurance, and it's often overlooked in a financial plan given that we are living longer today, well into our 80s and possibly even the 90s with advances in healthcare. And without a plan, it can seriously deplete your savings first.
Yeah, really good topic, Tony, to bring to my guest today. I want to give a little bit of background about Tony. Tony Sablan, wealth advisor with Ego Strategies, LLC. He's also the founder of Ultimate Wealth Strategies based in Bellevue, Washington. Tony works with individuals, families, and business owners to identify what motivates them, that keeps them up at night, and focuses on financial solutions that can help make their goals a reality. He not only relies on his own knowledge and experience, but also the experience of a team of specialists. His mission is to develop enduring relationships with his clients by providing expert guidance pertaining to life insurance strategies, investments, and upgrading people's financial plans. Tony is also a soon-to-be author for his financial planning book coming out in the fourth quarter of this year. Very exciting, Tony. And again, it's just excited to have you here and also to have a conversation regarding long-term care. So can you explain a little bit to my listeners about what long-term care is, Tony?
Well, generally, when we think of long-term care, we think of medical care. And really, long-term care includes care services outside of medical services, which makes our lives more comfortable. And this usually is defined as help with the following activities of daily living. And that's bathing, eating, transferring, dressing, toileting, continence, or help with the cognitive impairment. It is not covered under your health insurance, and that's one of the biggest misconceptions.
So, Tony, what are some reasons that you should consider when deciding about whether or not to get long-term care?
Well, considering the following statistics according to the AARP, 70% of Americans aged 65 and older will need long-term care. And 80% of those aged 65 receive care either at home or an assisted living facility. And annual costs in Washington state, at least the median annual cost for things such as homemaker services, that's about $57,000. Home health aid, another $57,000. Nursing home care can get you roughly about $97,000. And a private room within a nursing home care is about $107,000. So as you can see, it can get really pricey for care.
Yeah, so if you're listening to that, it really is to do something about it now and figure out what your plan's going to be to make sure that you have this long-term care in place. So, Tony, what about myths out there about long-term care?
One of the biggest myths is that it's expensive to get a plan in place. And the reality is you can't afford not to have a plan.
Yeah.
The reality is this cost varies a lot by person, and our goal today isn't to try and predict this or come up with a big number to scare or intimidate anyone. The goal is to create a plan that best fits your objectives, no matter your budget. So more of the story is there's a plan that will fit your budget. And another myth is that the government or health insurance will cover me. And that's not true. Medicare or conventional health insurance and HMOs generally cover only skilled care. And most long-term care is not skilled care. Disability income insurance does not cover long-term care services, or Medicaid has strict limitations and requirements before it will cover long-term care expenses. And the last myth I'd like to share is, often folks will say, I'll be able to pay for it myself. Well, It depends. On average, nursing home costs can run over $90,000 per year. And considering a couple with $500,000 in total assets, you can deplete those assets in a few years if you're not carefully planning.
Yeah, relatively quickly. So if I have someone listening right now, Tony, that's asking the question, when would be the best time to purchase your long-term care insurance?
I get asked often, if I'm going to pay for 35 years, then why don't I just wait until I'm 65? Well, for starters, today you're probably healthier and definitely younger than you'll be tomorrow. So when you apply for long-term care insurance, you go through an underwriting process, which basically gives you a rating based on your current health and age. So essentially, the younger you are, the healthier you are, and the more likely you are to get a favorable underwriting outcome, which will affect the premiums you pay.
So get it as soon as you can to make sure that you're healthy and you're not going to pay those extreme cost for them.
Exactly. And then, even if you are in your 60s or 70s, the best thing to do is act now rather than keep putting it off, because you won't be younger than you are today.
A very good point, Tony. So what are the key risks in creating a financial strategy for long-term care?
So a key component to staying the course is having or building a strategy that minimizes the 5 common financial retirement concerns. And that's inflation risk, market volatility risk, withdrawal risk rate, and longevity. And the 5th and most significant concern is health. So staying healthy, living healthy, being healthy, and all of the costs associated with our health can affect your financial plan.
So, Tony, let's talk about some ways that you can cover your long-term care.
There are different ways, and we won't get into the details, but I'd like to share that you can cover long-term care costs through Medicare, Medicaid. You can self-fund with personal assets, or having a long-term care insurance. So when you reach out to me, I generally go over your options based on your current situation and goals.
So, Tony, how can my listeners reach out to you?
By checking the Money Hour website.
There you go. So, Tony, are there cultural aspects of long-term care?
Yeah, so in some cultures like the Latino culture, Asians, or even the East Indian cultures, it's customary for children to take care of their parents or older relatives. And the dynamics of this plan really creates a cycle of stagnant to no wealth transfer from generation to generation, because you're redirecting your current retirement dollars as a young couple or young individual, and any legacy planning that you want to transfer to your next generation backwards to your family. So it really keeps folks in the same wealth bracket, if you will. So having a plan that takes into account your current long-term strategy rather than transferring it onto your kids is a tough challenge for certain cultures.
So what do you see as the best way that people are actually taking out long-term care insurance for their parents?
That's a good question. And usually the answer is they don't have a plan.
Yeah.
And you're limited with assets to take care of them. So really what I'm seeing with some of my clients is they've already gone through that long-term care plan, and really it's just their personal savings and leaving work early to go take their parents to the hospital. So really there's just not a lot of planning.
And I have to say, as a daughter-in-law, my mother-in-law is going through some things now, and she got her long-term health care at a very, very early age. And it's been such a blessing for, not only us, but also for her, that she doesn't have to put that burden on her kids. So, really planning early. And I know that hers was relatively inexpensive because, just like you said, she got it at an early age. So what if I have a listener just saying, I don't need it. I don't need long-term care. What do you say to them?
I usually ask them, how will spending $3,500 to $7,500 per month per person impact your family?
That's crazy.
And then I also ask, who knows your extended care plan and has copies of it? And lastly, I go, what does your current long-term plan look like? If you don't, if you say you don't need one, because with a proper plan, your care can be provided where you choose and not someone else, and it can be provided by the people you want, rather than people that someone else wants. And for most folks, that's staying at home surrounded by family and friends. And that's where the overwhelming majority of people who own some sort of long-term care insurance receive their care, and that's at home.
So, Tony, you mentioned Medicaid or Medicare. What's the actual difference between long-term care insurance versus Medicare?
Medicare, that's a government-run program, whereas long-term care insurance, generally you're getting that from a private insurance company such as, New York Life, Transamerica, and any other large insurance companies that you're familiar with.
So, Tony, what are the odds that you're going to need long-term care services during your lifetime? Are there any statistics on a percentage of people that need that, or what do you see with your client base?
It's a high probability, and that's 70% of the Americans age 65 or older are either going through long-term care or accessing their benefits or in need of long-term care.
So if you're listening, everything it seems when it comes to money, and that's the show is called The Money Show because it's really all about creating safety for you and your family. And when you get into your retirement age, you want to make sure that you can enjoy that and not have the additional stress of things that you could have taken care of at a younger age. So, really encouraged to take a look at that of your long-term care insurance. Make sure you get that lined up now. Tony, any final thoughts that you want to leave my listeners with or suggestions that you have for them regarding long-term care?
Yeah, so most Americans will need it at some point, and that's not treatment of an illness or an injury. Rather, it's help with daily activities when a medical condition affects your ability to care for yourself for an extended period of time. It may be expensive, whether you get care in your home or at a facility. The cost can add up quickly. So a plan is a way to keep your retirement on course and enjoyable. Third, you may not be able to count on Medicare or Medicaid to pay the bill. Medicare pays benefits for assistance only immediately following a hospital stay, and it won't pay for more than 100 days of care. And most costs must be paid out of your own pocket. Medicaid offers assistance only if you have a financial need. And since not all long-term care facilities accept Medicaid patients, your options for care may be limited. And the other thing to note about Medicaid is that you have to spend, if you're in a bracket where you don't qualify to qualify for Medicaid, you have to spend down a significant amount of your assets. And then fourth is, affordable long-term care plans are available, and there are many options for long-term care protection. And for many, it's just a fraction of the cost of care itself. And, a little coverage can go a long way. And lastly, the younger you are when you buy, the less it will cost.
So act now, get yourself taken care of. You don't want to get to retirement age and have your assets depleted because it's going to the cost of your long-term care. Tony, thank you so much for coming back in studio again. It's always a pleasure chatting with you.
Thank you, Tina.
Coming up next in the Money Hour, investing in low interest rate world, Gary Castle with Mountaintop Advisors right here on 1150 AM KKNW after the short break.